the best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for a special episode of Under the Radar with me, Chua Tian Tian. That's all about family businesses today as we speak to Hong Leong Asia, a part of Singapore-based conglomerate Hong Leong Group. Now, the firm's beginnings can be traced back to the early 1900s when Hong Leong Group's founder, the late Kwek Hong Png, boarded a cargo vessel in Xiamen at the age of 16 and with only an $8 ticket, a straw mat, and a quilt for warmth. While life was tough, the founder held hopes of making it big in Southeast Asia as he made the journey over to Singapore. Now, that's where he worked at a hardware store for years before starting Hong Leong in 1941. Now, the firm was first set up as a general trading firm dealing in ropes, paints, ship, and rubber estate supplies. And eventually, the business grew to become one of Singapore's largest conglomerates, sprawling across industries from property, hotels, financial services, and trade and industry. At its subsidiary, Hong Leong Asia, the company prides itself as a diversified Asian multinational, with core businesses in construction and transportation sectors and gross assets of over 40 billion Sing dollars. Its business can be classified into two broad categories, namely building materials and powertrain solutions. Financially, the firm had in February reported a net profit of 38.2 million Sing dollars for its second half ended December, up 12.2% on the year. Now, the company's profitability was said to be boosted by strong performances in its powertrain solutions and building materials units amid improved market conditions in Singapore and Malaysia. But how does the firm assess the road ahead given ongoing trade tensions around the world? And in the meantime, the issue of governance in family businesses has also come into the spotlight recently. So how does Hong Leong Asia approach the topic of governance and succession planning to ensure that the legacy of its founder lives on? Well, lots of questions, and joining me right here in the studio is Stephen Ho, Executive Director and CEO at Hong Leong Asia. Stephen, welcome.
Thank you, Tian Tian, for having me.
Great to have you join us. And Stephen, we've briefly talked about Hong Leong Asia as this diversified Asian multinational with core business in the construction and transportation sectors. But let's hear from you. How did Hong Leong Asia come about? How did it branch out from the bigger Hong Leong Group as it grew over the years?
Yes, I think you've given a very good introduction of the Hong Leong Group. I think to look at it this way, to understand Hong Leong Asia, you've got to look at the history. So you've mentioned briefly that it's founded by the late Mr. Kwek Hong Png, and he's known to be a very far-sighted entrepreneur and a noted philanthropist. So he came to Singapore in 1928 to seek his fortune.
Wow.
And he was very determined to succeed because he said, look, I cannot go back as a failed person to face my parents. That's clearly a no-no for him. So he was very determined to succeed, and he proved himself to be a very loyal and responsible employee, working for a hardware company, as you mentioned. And he got promoted from being an apprentice. He rose to the position of clerk, then manager, and eventually general manager. Mm-hmm. Now, at that point, I think he felt that he could perform better if he were on his own. And therefore, he started to come out and start a company called Hong Leong. Now, Hong Leong in Chinese is known as Feng Long. Mm-hmm. So Hong means many things, big, good, plentiful. Long means great prosperity.
Yeah.
Now, taken together, Hong Leong means it's a company with high growth potential and an abundance of opportunities to grow from strength to strength. Now, Hong Leong today, as you mentioned, is a very diversified business. It encompasses finance, property development, hotels, trading and manufacturing. Hong Leong Asia is a trading and manufacturing arm of the Hong Leong Group. Now, Mr. Kwek Hong Png passed on in 1994. He left behind a legacy that we would very much like to preserve today. And therefore, you can see us capturing that in the core values of Hong Leong Asia. And the core values, the 5 core values basically are keeping the customer first, mind the details that matter, do the right things, think fast, work faster, and create an impact beyond our business. Now, Mr. Kwek, the late Mr. Kwek Hong Png, believes that, especially with the last, about creating an impact beyond our business, because as a successful entrepreneur himself, he felt that he must do more for Singapore and more for the people. And it's through this that he's known to be a very generous philanthropist.
Fast forward to today, Stephen, what would you say is Hong Leong Asia's value proposition, business model, as well as its positioning against other industry peers in supplying building materials and related products, say Pan United Corporation and cement?
So with Hong Leong Asia today, clearly it's still 73.38% family-owned under Hong Leong Corporation. The rest of the shares can be found in public hands. The business itself is managed largely by professionals. Yeah? So you talk about powertrain solutions and building materials, and that's where professionals like myself are running the day-to-day operations. Now, clearly, our business is driven by urbanization and infrastructure investments in the key markets in China, in Singapore, Malaysia, and the export markets in the emerging countries. So projects like integrated resorts, the expansion, the Changi Airport Terminal 5 project, the data center expansion, the increase in public housing development and upgrading works would all really help our business tremendously. Now, we are, of course, positioning for growth by reinventing ourselves and staying reliable, resilient, and responsible. The 3 R's that we often ask ourselves in the business. And we want to be able to stay reliable, resilient, and responsible with our products and our services. So the value proposition today is about developing and delivering sustainable and innovative urban solutions for cities of the future. Now, in Singapore, we have done well with expansion to over 160 concrete mixes certified as Singapore Green Building Products, offering customers with lower carbon options. Tian Tian, you mentioned about Pan United. I think Pan U is a formidable competitor in the ready-mix concrete business. Now, with Singapore, the annual consumption of concrete is estimated at about 13.3 million cubic meters. Now, clearly there's enough room for 2 or even 3 competitors to grow in this market.
And Stephen, zooming in on your product verticals, right? Earlier we talked about how Hong Leong Asia's business can be classified into 2 broad categories. One is building materials, looking at cement and the likes of prefab solutions. The other on powertrain solutions. So take us through the various verticals and which is the most important one for the firm when it boils down to, the dollars and cents on your balance sheet?
Tian Tian, that's a great question. So we're now focusing on these 2 key business units. And our focus here is really to strengthen that business model by building a vertical integration along the value chain and also extending our horizontal capabilities selectively with our powertrain solutions. Yeah? Now, let me get into the specifics here. So the last 5 years has seen us making new investments in areas where we can automate our businesses. In Singapore, for example, with our building materials business, we invested in the state-of-the-art new facilities in our precast plant in Punggol Barat. So with greater automation, we can raise our construction productivity, increase the production quantity, and improve the overall quality of the precast components. Now, we've also automated our ready-mix concrete plant in Jurong Port, and that's the ready-mix concrete ecosystem that's found in Jurong Port. This batching plant allows for high-speed transfer and loading of raw materials from bunkers to aggregate towers and can produce about 540 cubic meters of concrete per hour. Next, we were also the first in Singapore to introduce the 12 cubic meter trucks to improve the operational efficiencies in transporting our concrete from point A to point B. This innovation with larger trucks has obviously increased the productivity per truck and reduces the number of truck trips and carbon emission on the road. Overall, productivity has been estimated to have increased by 30% when compared to the older 9 cubic meter trucks.
If I were to tone it down as a layman, when we look at Hong Leong Asia, the two main business are building materials in terms of cement, in terms of prefabricating the entire rooms for like HDB flats and etc. And you have powertrain solutions, which are like engines, is that correct? And while both categories are growing strength to strength, are you more focused on the building materials side or are you more focused on the powertrain side in terms of revenue or earnings contribution?
Yeah. Tian, I think the way to look at it is that both businesses are equally important. Now, your earlier question was clearly, when it comes to dollars and cents on your balance sheet, which one is more important? Now, I think powertrain solutions business clearly is more capital intensive. It's got a heavy use of a balance sheet. And it gives us the breadth of the markets in China and the emerging markets around the world in as far as Africa and South America and as close by as Vietnam and Myanmar. Building materials, on the other hand, is asset light in comparison and has a higher asset turnover. And it gives us the depth in our vertical integration with our operations in Singapore and Malaysia. Now, both of these verticals, both of these businesses are equally important. It gives us the market coverage to play in the largest market in the world, and that's China with our powertrain solutions, as well as the high growth prospects of the construction sector in Singapore and Malaysia.
And since you've mentioned quite a lot about China, Vietnam, Malaysia as well, let's bring this question forward and take a look at your global footprint. How many geographical markets is Hong Leong Asia present in at this point in time? Which are the key supply versus demand markets? What does it mean for the firm from both a strategic and a financial standpoint?
So we last counted that the powertrain solutions business has a presence not just in China, but 18 other countries, mainly in the emerging markets. Now, we don't sell into the U.S., but the emerging markets around the world, including some countries in Africa, in South America, are where we sell into. Now, and plus we have more than 6,000 service stations worldwide. That's your powertrain solutions. Since COVID-19, we've learned that we need to bring that supply base closer to our home markets, and regionalization of our supply markets have been an important strategy for us to remain reliable, resilient, and responsible. So basically what that does for you is that it reduces our dependency on long-haul supply of critical raw materials as shipping costs can very quickly escalate. Southeast Asia is the most important markets for supply as well as demand for our building materials business. And China is still the largest domestic market for our powertrain solutions.
Okay. And who would you say are your customers under the various geographical markets? What is the split between public clients and private clients?
With the powertrain solutions, we tend to sell to the OEM manufacturers in China. With the building materials business, our customer profiles are more mixed. In the ready-mix concrete business, we have private projects in both Singapore and Malaysia. And with our precast business, we tend to do more HDB projects.
I see. And let's take a look at where things are at for Hong Leong Asia right now, Stephen. Because financially, in February, the firm reported a net profit of 38.2 million Sing dollars for the second half ended December, up 12.2% on the year. And the company's profitability was said to be boosted by strong performances in its powertrain solutions and building materials unit amid improved market conditions in Singapore and Malaysia. We'll talk about HDB later on, but how would you assess the firm's latest performances?
So for the full year 2024, we reported or net profit after tax and minority interest at 87.8 million, so up 35.3% year on year. So clearly the first half was slightly stronger than the second half, as you've mentioned. Now we have obviously some one-off bad debt provision in China, which weighed on the overall results in second half. Now, despite this, the reported PATMI has been the highest level we've seen in the last 5 years. I think it more than doubled since the year 2020. Now, although we have seem to have done fairly well, we feel that there's still room for improvement. And I think we can realize our full growth potential even more. Our unit sales growth in powertrain solutions in China is up 13.7%.
Wow.
And that's clearly helped by the stronger export markets. The domestic markets has not fully recovered yet from pre-COVID days. In fact, if you look at this, what we call the heavy-duty and medium-duty trucks and buses, it didn't grow at all. The market actually came down by 2.6% year on year. So the domestic markets has not recovered. On the other hand, we have done fairly well. Again, overall, our unit sales is up 13.7%. Our domestic sales is up by kind of mid-single digit in terms of unit sales growth. So clearly, we feel that once China recovers with the trucks and the bus unit sales, we are able to participate in this growth even further. So there is still opportunity down the road to grow even more.
Let us hold on to our thoughts on China in just a bit. We'll talk about that and we'll talk about Donald Trump as well. But let's talk about HDB and Singapore, because in August 2024, Hong Leong Asia said its prefabrication business was affected by what it called slow project offtake in the industry. So basically, as what I understand, there was an increase in HDB launches over the past couple of years, and that external consultants that were engaged by the HDB, they have not been able to deliver the drawings of the flats on time. So that eventually delayed contractors' approval processes for projects and the demand for, construction materials. Can we confirm that that issue has been resolved? What is demand looking like right now? Can you now cope with the increase in demand for building and construction materials?
That's a great question. Clearly, there were issues in the past. External consultants that were hired were unable to provide those structural designs on time, which obviously resulted in delays in the submissions of drawings and subsequent approvals by relevant authorities. This delay has been roughly about, let's say, 4 to 6 months that we saw sometime last year. And it could be attributable also to post-COVID as things are returning to normal and people are coming back to work and so on and so forth. Now, very normal to experience some delays when there's this surge in HDB launches over the past few years. But the situation has since been normalized. And Tian Tian, I can confirm that we have resolved these issues on our end with the overall order in hand.
And you're able to cope with the sudden influx in demand as well.
Yes, we've seen our precast capacity utilization improving gradually as we fill our order book. In fact, the order book has been increasing since 2024 year on year.
Wow.
And it's the highest level that we've seen so far.
And Stephen, earlier you talked about China. Globally, U.S. President Donald Trump's tariff plans continue to throw in uncertainties for multinationals, including tariffs on U.S. steel and aluminium imports. We've seen restrictions on China as well. How far is the firm directly exposed to risks caused by global trade tensions? Or are you more indirectly affected, say, by the domestic growth in China as a result of those tariffs? How do you intend to get around those uncertainties?
The tariffs that are being imposed on the goods that are entering in the U.S., it's very clear that we are not exposed to this as a direct risk. But obviously the fear in everyone's mind is the indirect risk that tariffs will bring about slower growth in the global economies. While there may be greater uncertainties on the global outlook, what is certain is that our order book remains strong and we remain reliable, resilient, and responsible to our customers.
I see. So, Stephen, on the whole, what would you say is the outlook for Hong Leong Asia as we head into the second quarter of 2025? What will be the key drivers of growth? How do you intend to capitalize on them? And now that you've seen the order book coming in, right, the value of the order book, any financial targets that you have in mind?
Yeah. So I usually don't like to provide outlook, short-term outlook on a quarterly basis, Tian Tian. And as you can sometimes imagine, you miss the forest for the trees.
Yeah.
Overall outlook remains, if you look longer term, remains positive with the built industry in Singapore, which should be the key driver of growth for the economy in the next few years. In Malaysia, the southern market of Johor will do well once the implementation of the Johor-Singapore Special Economic Zone comes into effect. And with our powertrain solutions, we are optimistic that we can grow despite all these concerns about slowing growth in China with the global economy. Why is that the case? Because we feel that we can grow our domestic and export market shares, and also we are able to cater to new customer segments in new markets on power generation with the proliferation of data centers in China and Southeast Asia.
Okay. And, Stephen, in the meantime, what would you say are your top 3 priorities for Hong Leong Asia from both an operational and also a financial perspective?
So first and foremost, I would like to continue to grow our businesses profitably. As I mentioned earlier on, we've doubled our profits, more than doubled our profits in the last 5 years with the bottom line, and top line I would still want to continue to grow. Secondly, I would like to engage our people on this growth journey so that everyone is excited with the growth opportunities, both for themselves professionally and as well as for the company. Now, hopefully, if we do this well with the first 2, we can reward shareholders with better returns. Last but not least, in terms of operational priority, I would like to drive our investments even harder, especially investments that we've made with automation, because we want to realize the efficiency gains and to be able to stay ahead with our game.
If you're just tuning in, we're now in conversation with Stephen Ho, Executive Director and CEO at Hong Leong Asia. Well, Stephen, I hope you understand that I have to ask this question as a journalist because the issue of governance and family businesses has come into the spotlight recently. How does Hong Leong Asia approach the topic of governance and succession planning to ensure that the legacy of its founder that we talked about earlier lives on?
The governance issue, we clearly have an independent board. We have an 8 members board, of which 5 members are non-executive members. And out of the 8, 3 members are women. Now, we all have different skill sets and competencies on the board. We are very well diversified in our skill sets in business management, finance and accounting, legal and sustainability, digitalization and IT. So directors have actually maintained a level of independence to be able to ask the right questions and stimulate the right discussions at the board level. The chairman of both the board and the board committees allow sufficient time for deliberation on the agenda points. And the board chairman facilitates this group discussion without diminishing the capacity of the board for independent decision making. So that's clearly how we want to see the board being operated, that they would have this kind of oversight on the corporate governance. Now, in terms of succession planning, I would say that for Hong Leong Asia, for every key position, we would have identified a succession plan in place, and we would clearly want to allow all our staff, including second generation family members, a chance to learn, to prove themselves, and that eventually they can go on to lead the company.
So as a professional management executive, right, Stephen, what would you say is your role at Hong Leong Asia? How do you balance objectives that the family owners, 70% owned by family, how do you balance objectives that they have in mind for the business versus that of your shareholders, given how your SGX listed as well? How far are they aligned from your perspective, given how everyone wants to make more money, so to speak?
There is actually no conflict between the objectives of the family owners and that of the public shareholders. You rightly said the family owners have 73.38% share of the company. In fact, they have more to lose if the business is not well managed. Yeah, so my job, I think it's very clear. We want to maximize the profits for the shareholders, and in turn, serve the company even more.
Thanks so much for the insights on governance, Stephen. Before we let you go, right, what are some future plans for Hong Leong Asia for the rest of this year, and what can we look forward to out of Singapore in particular?
Tian Tian, we've covered much ground today. I would just like to leave your audience with the following conclusions. Hong Leong Asia is well positioned for further growth in the building materials business, not just in Singapore, Malaysia as well, and the powertrain solutions in China, as well as the emerging markets. Secondly, urbanization and infrastructural investments will continue to be a key driver of the growth in our markets that we operate in. Thirdly, we've been innovating to make our products more efficient, more cost competitive, and with lower carbon intensity. So we're very excited about our future growth opportunities, and we hope that you are convinced as well.
Thanks so much for the insights, Stephen. Really appreciate it. That was Stephen Ho, Executive Director and CEO at Hong Leong Asia. Thank you so much for joining us on Money FM 89.3.
Thank you, Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.